Again, this is another session where we're going to discuss the week ahead and also look at trades that we took from last week, right? What worked well, how were the setups that we identified last Tuesday, how did they play out? That's what we're going to focus on. Before I ask your guys to give me your trades, let me show you something from last week. So last week, one of the things that I mentioned was if price goes outside of the supply zone and uses it as support, we will take it to the long side. If price comes down to this demand zone, or it could have stopped at this gap, but one of the two. But I was thinking if it started to come down, it would come to this demand zone. Then we would look for price to resume its upward momentum, at least for the short term. But the third thing was at the end of Tuesday, we said if price gives us a push up, keeping the lower highs, and we get an entry to the downside, we take that entry to the downside. So I want to show you really on at this. This is the opening of Wednesday. I just want to focus on that. And sometimes it's good to look at, not always, but sometimes it's good to look at lower time frames, because in the lower time frames, so here's our timeline. I'm going to remove this. I'm just going to move it out of the way. So we got our inverted hammer right at the opening, right? That 5 minutes. There are some people who don't like to trade before the first 30 minutes are done, first 15 minutes are done. But when I'm looking at a setup that I have already identified on the hourly, if I have identified a setup that said, hey, if I get a push up, make a lower high, I'm going to take it to the downside. I'm just going to look at, real quick. I'm not going to spend too much time. I'm not going to stare at 5 minute charts all day long. I'm just going to look at, hey, can I have an entry here? And my entry came at the bottom of that 5 minutes when I get that inverted hammer, and above this high here, or maybe slightly above these highs as my stop, and targeting my ratio, right? 2-to-1 ratio. So that same day, we were able to exit first position. So I left this so you can see it, that it's not very complicated. And if we said, if this happens, we're taking a trade. When that happens, we take the trade. There is no second guessing, because it gave us what we wanted. It did not stop there, right? So it went, if you look at here, it was a 3.3 to 1 ratio by the end of the day. And if you have left some runners. Again, I'm showing you the 5 minutes, not because I want you to trade the 5 minutes, but to show you how, if an opportunity presents itself, I'm going to use that 5 minutes to take the trade. Because if you wait for this hour bar to close and you go at the bottom of that hour bar, you're very, very far away from the ideal entry, and your stop is much wider. So that 2 minute rule doesn't change. At 6:30, when the market opened up here, I can stay, okay, let me watch it another 5-10 minutes. And if the opportunity comes, I'll take it. So that's what happened. The first 5 minutes, that opportunity came. And then after that, I switch back to 1 hour, and I can walk away because I have my stop set on both sides. I can walk away, nothing to worry about. So just really wanted to point that out to both of you. Say, when we have identified a trade, we have to take it. There is no reason we don't take it, unless you say it was not clear to me, or for this reason I missed that opportunity. So wanted to call that out. So that's good. Any questions on that specific trade?
I mean, I guess in the moment, that makes sense, definitely. I think I saw it a little late after the first kind of bar had developed pretty well. And so it kind of looked like almost a hammer instead of an inverse hammer to me. But of course, that's after the hour closes, right? And you see the entire movement. So I can definitely see how, if you look at the first 10 minutes, yeah, definitely in the shorter time frame, especially, it looked like an inverse hammer. So um,
Yeah,
yeah.
yeah, and it's good to point out because you raise a valid point. That is, if you're not gonna look at a lower time frame, let's say because you're looking at the hourly bar, you're not gonna look at 6:30. Like you're gonna wait until 7:30 to look at the 6:30 bar. That's a
Mm,
valid way of looking at the market, and that's okay if you have missed it, right? But at
mm,
least if you when you miss something like this, what I would like you to do is this bar. You say, okay, I at 7:30 I saw the close of the 6:30 bar. Was there an
mm,
entry for me, or do I wait until down here? So if we look at this entry, if we say, okay, right at the close when the 7:30 opens, I will take that trade as an example. And I'll tell you why you can be confident to take that trade, and you target your normal 2-to-1 ratio, you'll still have a winning trade. But the only way you do that at 7:30 to be able to confidently take this trade here, because the bar went all the way down and reversed, am I comfortable, is you go to that lower time frame and see what happened during that hour, right? What was the position during that hour? So it went all the way down here. It reversed, but it did not make a new high, right? It stayed below.
mm.
So then you can be comfortable to say, I'm going to take this trade. It's okay if you're wrong, right? It's always okay if you're wrong, because you're taking this trade because knowing that I could have taken it slightly up here, but it's not that much of a difference here. I'll take this trade, right? Makes it valid, but it's good to
Mm.
understand. Okay, if I missed the trade, can I still get it? Right? Don't say, "Oh, I missed it the first 5 minutes and I cannot get it anymore." Can I still get in? If the difference, the entry price is within, you know, short distance. You take the trade, you leave the stop the same. You don't shorten the stop, right, Manny? I think it's very important not to be afraid of losses and tighten your stop. Your stop must remain where it should be. That's critical. Okay? All right. Shall we go into your trades?
Uh, yes, I guess we are.
So, what
um,
chart should I pull up?
I went with SPY this time,
Okay?
and the trade from Friday morning. Um, it's just a strong, strong open, and a strong, strong inverted hammer at that open.
Okay.
Um, and um, you know, it was such a strong hammer. It's almost, you know, it made me a little bit cautious because of where we are in this chart and kind of feeling that we just, you know, blew past that supply zone the day before,
Yeah.
came back. So that gave me that, um, you know, I was expecting it can go two ways, right? It could go um, use that supply zone as support, and then take back off to the upside, or it could continue to collapse and down. So what I decided to do is I'd say I'll take a um, um, maybe like 50% of my usual position size, and then monitor very closely. And so I entered at um, the next bar. I waited until this bar fully formed, and then the next bar I entered um, slightly above the open on the second bar. And I said, I will use the close of the previous day as my stop loss.
So, So if you use the close of the previous day, this is your stop loss right
A little bit
here.
of high, just
Yeah,
at
but
the end
somewhere
of
here.
yeah.
Yeah, and to me that's really really tight.
Yeah, and I said I would just make a decision, kind of just monitoring closely and closely, um, and then as it developed, um, I kind of watched it. I knew this was going to be a 1 day trade, anyways, because it was Friday, and I didn't want to leave it running over the weekend.
Okay.
And then as soon as we kind of got towards my 2x multiple of that, which came like 2 hours later, I said, okay, I'm gonna call it good on this trade right here.
So I want to know how you got your 2x. Uh, because to me it's somewhere down here and would never hit that 2x unless your stop is really really even tighter.
Oh, what? For some reason, let me.
I don't
So I
like tight
entered.
stops personally.
mm,
So what was your entry?
My entry was for what was this? This is 412.66 was my entry.
Or 1266 was your entry. Okay.
1 sec. Let me double check the exact number. 412.67. Yeah.
Okay. So if we do that, and then what was your stop? Do you remember your stop? I think this is a good lesson, so that's why I want us to go through this
Yeah.
exercise.
Yeah. I'm just trying to recreate it real quick. My stop was at um, just below at 1.75. So just at the one was it 1, 2, 3, fourth hour, middle of that wick, which was
It's
68.
middle of which week?
The red bar before it reverses. So it's at
This bar here.
410. Yeah, 410.68. Yeah.
Yeah. So I don't like this stop. I really don't like this stop because it's not logical. So help me understand your logic behind it. Like to me, it's not logical to me. I'm not saying you're wrong, right? It's to me, it's not logical. So uh, I don't want us to select the stop just because it makes sense for our exit. So what
Mm.
was the thinking behind this stop?
Yeah, I guess I was expecting it to potentially go 2 ways, right? It can either reverse to the upside after it used that supply zone as support. At which point I said if it crosses the high of the previous day, I'll use that as my stop and cut it loose and potentially enter on the reverse right to the upside.
Okay, so
Uh,
the high of the previous day, I agree. It makes sense, right? So that's up here.
yeah,
Somewhere
yeah,
up
that's what I
here is the
that's what I
stop, right?
used.
So
Yeah,
then if we from your entry, because I fixed the entry,
yeah,
your exit to get that ratio that we want, we we didn't quite touch it, but it's close enough. Okay.
yeah, and I exited before it got to 2, just because it was a low confidence trade. So
Okay.
I exited at 1.76, and I said, you know what, that's good enough. I'm gonna take my wins, and I don't want to leave it running over the weekend. So I said I was gonna take my exit then, which
Okay.
kind of what I followed.
Okay. I think your stop makes more sense. I thought you said you took it at the middle of this bar here, which did not make sense to me. But saying the high of the day is where you want your stop to be, that makes sense. The high of this pin bar, the inverted hammer, would have been more made more sense. But that's okay. This also is pretty good one, especially now you're thinking behind it, right? I hope you write that down. I hope you write
Mhm.
down. I did not use a more logical stop because I thought this trade was very risky. I only took 50% position and I wanted to get out of this position very quickly. Right? This is exactly the kind of things that you should write down in your journal because now that you've explained it, I agree. Right? It's you took the high of the previous day as your stop. If you were wrong, you wanted to be wrong quick and get out, and then you did not wait for this to go down. Let me give you something else uh, to kind of help you think about this as well. We are making higher highs and higher lows. So when you see that you're gonna take a trade in this higher high, higher low environment, you're taking content trade, right? Which is something I don't want you to do, right? Like from
Yeah.
that perspective, I don't want you to take those content trades. But with that
Mm.
said, we've said we have a downward bias, right? So based on that bias, you can still think, hey, this might be the time. Let me take a chance. That's fine. So this is good. Actually, this is a good trade, and also I'm glad that you took it uh, off your plate as quickly as you can, because as you saw in this environment, it reversed very quickly, right?
Yeah.
So it's good. It's a good trade. But I know I beat you up on it a little bit because I really want you to think about your approach.
Mm. Yeah. No, that's
Yeah.
definitely some good feedback though in terms of not swimming against the current because that's an easy way to lose all your money. So
Yes, exactly. Exactly. What other trade did you take?
that's it. That's the only trade I took. I'm a little disappointed I didn't take the trade this morning, um, because it gapped up on the open, and I mean, it was one of those trades that, hey, if you just even take a low confidence, just throw something in there at the open this morning, and then it immediately right away gapped down right within the hour. So that would have been a nice, just small move right there. But again, it's
So
not
how would
huge.
you
So I
know? How would you know to take this to the downside? Because we're in this environment where the current is up. Why? What would make you confident to say, "Hey, as soon as it gapped up, I'm gonna close the gap, so I'm gonna take this trade."
just the fact that it's going to close the gap, right? There's a
So okay, I
more
knew that
pressure
was
if
your
you.
answer. How about here?
Yeah, you're right. Actually, now that you
Right?
said that, yeah,
It's never a
yeah,
guaranteed, right? And how
yeah.
even here, it closed, right? Eventually, it closed,
Mm,
but it didn't close right away. So if you took a position because it gapped up to the downside, that's a loser, right? Even when it closed, it's a few days out. If you're doing your options, theta decay has eaten away your premium,
mm,
and so that makes it a bit tricky. So I don't like taking those trades just from that perspective.
okay.
But something else you can consider is, hey, I could not make a new high. I gapped up, I pushed up, but I could not make a new high. Let me see if I can
Mm,
close this gap. Like some kind of thinking like that, intentional, in the cues, but in the spies, you did make a new high.
mm,
That's actually one not to take.
yeah.
Yes, people who trade lower time frames, they can say, look, I took it from 414 to 412 ish, right, to 413 ish area. True, because it used the supply zone as support, right? It used the supply zone as support. It made, touch multiple times, and then it reversed, right? Even in the
Mm,
cues, if you look at it, is a I didn't make a new high. This one I can try and see if I can close the gap. Yes, you went from 320 to the bottom of that gap, 318 and change. And it actually went, close to 318 to the low side. So it's a bit tricky to say, uh, just because it got up, I'm going to take it. But in the Qs, it might have made sense to somebody. Like I didn't take this trade, but it might make sense to somebody and say, I made a lower high, let me take it. In the spies, I make it a new high, I'm not taking it. Right? I made a new high. I don't know what this gap means because this gap in the spies, if you have to really look at the lower time frame, is this gap is the gap we're talking about. Right? From the close of yesterday to the low of the
Mm.
first 5 minutes, and then we immediately close that gap right in the first hour.
Yeah.
And then we used supply zone as support, but we did not make a new high. So with us not making a new high, today's action, even though it was a positive day, it was very, very small positive day, right? So I'm not very comfortable with uh, that position either. But those
Yeah.
thinkings are good, right? But it's a lesson by itself. Just because I see a gap up, does it mean that it will close immediately? The answer is no. Sometimes it does, sometimes it takes a few days to do it. So now let's just quickly see what other opportunities do we have? What can we do now as opportunities? SPY is making higher highs, higher lows. Now, in our fib, this is where we are. For SPY, personally, to take it to the downside, I need to see uh, some breaches of the 38.2, the 50%, 61.8 before I take it to the downside. But this could happen. It could come down, test somewhere here, and go back up, right? This supply zone now, to me, it doesn't exist. I have a new supply zone actually up here. This is a new supply zone I want to be concerned with. I have this new supply zone I want to be concerned with. So if price comes down to 38.2, 50, 61.8, this would be a good place for me to enter a trade to the upside. Because short term is still upward bias short term. Long term, I'm still, by long term, I mean like in the next, 3 to 6 months, I'm still biased to the downside, right? I still think there's a lot of things we haven't taken care of yet with inflation, with unemployment, with layoffs, and everything. So this is a trade that I would like to take to the upside, retracement to this area. If you feel comfortable, a retracement to 23.6, that's also pretty decent area. If that does not happen, as always, I want to see supply zone cleared, used as support. This is another area for us to enter. Uh, Now, a riskier trade, this is again counter trade trend, is if we break the lows of today while we're heading towards this entry zone, it might be something that I might look at. Again, it's not something that I teach, right? Not something that I teach that you do. So stop here, somewhere here. So this might be a trade uh, that we take to this downside, and it gives us a good uh, risk reward. Uh, I don't know why it is doing this. It's confusing me. So this is a trade that we take. This is our stop and our target somewhere. It'll be quite a distance away, right? Our target because of where we're taking that position.
Yeah. So you just kind of watch for now and just monitor the chart?
Yes. That's what I would like to do. So spies, um, kind of similar. We've already, I mean, the Qs. We've already closed this gap lower high. So let's remove these old drawings. Let's remove this old drawing. So here, we've made our lower high, but we're also making higher low. This is, to me, this whole area is a consolidation area, right? This whole area is a consolidation area, and we're still not out of this supply zone. We're playing inside it, so I really want to see price break out of it and use it as support. I really want to see this to continue to the upside. To the downside, this high is still there, so this green to green zone is where I would like price to come down to, so that we can take it to the upside once it comes down somewhere here. Right? Once it comes down somewhere here to target back up here. So I don't see a whole lot of activities. I'm not comfortable with this sideways movement. I prefer to sit sideways, so on the sideline, not sideways, but on the sideline, on the sideways movement. This one is more defined. Spies are more defined, so I'm comfortable taking a trade there. Sounds good.
Yep. Maybe earnings season will take us back down to 38.2.
Yeah. Let's see. That's next week, right? Tech earnings season starts next week. Banks
Yeah.
have been reporting. But yeah, we're getting some confusing data, right? It's kind of mixed data right now. That's why we're not seeing price move in one direction strongly. It appears it wants to start to the upside and it collapses, or it starts to the downside and it collapses. So we have to see. We have to be patient in this environment. We can trade it, but we have to be patient.
Can we go back to the Qs real quick?
Sure.
So you expect it to break kind of below that. Okay, I see. Below that gap.
So what I would like to see, if I want to take this to the long side, right, not to the short side, is I would like price to come down to this area, right, my green to green area. So I just drew this line to the 50%, but it could go to 61.8 or it could be 38.2. Somewhere in this zone, I would like price to stop and give me a nice hammer. Then I take it to the upside.
Yeah.
Right? So that's what I would like to see. I don't know where this is, right? So I'm just drawing. These drawings it's just a reference. It's a pattern that I want. And this could stop up here, it could stop up here, or it could stop down here, right? I just want that pattern followed by a nice candlestick, right? Whether it's railroad tracks, a hammer, or engulfing. Yeah. So hopefully we'll have some trades. Hopefully this coming week. And maybe I would like you to take a trade or two.
Yeah.
And then, we can take it from there.
Yep.
Yeah. So we have our plan of action in place.
Yes, we do.
All right. All right. Sounds good. Sounds good. So I think we can call it good for today. Thank you.
Thank you.